I'm Sarah Borkson-Keto here in San Francisco for REIT World 2018, NAREIT's annual conference. Joining me today is Victor Coleman, Chairman, President and CEO of Hudson Pacific Properties. Welcome, Victor.
Hello, how are you? Thanks for having me.
So last month, Hudson Pacific formed a joint venture to own and operate San Francisco's historic ferry building. What are your plans for the property and how does it fit into the company's broader strategy?
Great, thank you. Well, we're really excited about having this asset as part of our portfolio. It's iconic. Everybody knows it's one of the probably top three most iconic assets in San Francisco, next to the Transamerica Building and now Salesforce Tower. Ferry Building is a little bit unidentified unless people really have spent a lot of time there. It's got over 200,000 square feet of office space, which is our bread and butter. The value add there is the mark-to-market office rents are going to roll at approximately 25 to 30%, and we've got about 30% of them rolling next year. And so we're going to reposition those office space and kick in that. And as a result, we'll probably see a 200 basis points shift in valuation from a cash flow standpoint in the next, between now and the end of 20. So in the next year and a half or so. And then the next piece is the retail, which is the exciting portion of that project. We've not quantified it yet, but really what's the game plan there is to bring the retail back to more of the locals versus tourism on phase one. So we're going to look to increase the farmers market another day a week. We're going to reposition some of the retail. The ferry terminal is going to increase from 10,000 people a day to 24,000 people a day with the new development that's going to take place in 2019. And we're going to capitalize on that. We're going to service it. And last but not least, we're going to even evaluate using the clock tower as a tourist attraction and maybe get people up there and have an Instagram moment, so to speak.
And how would you describe market fundamentals across your various submarkets?
I mean, listen, we're very fortunate, right? We're in the Pacific Northwest in Seattle, we're here in the Bay Area, and we're in Los Angeles, three of the hottest markets in the country. And across the board, I think what you're finding is all three of those markets today, by year end 18, will have market rent growth on the low end of 4% and the high end here in San Francisco of probably 10%. The tech, media, and entertainment demand in our markets have never been stronger. The large tenant absorption has been consistent for the last 24 months, and we see no end in sight. So we're pretty excited about the opportunities, and I think it's going to bear very well for the cash flow performance of Hudson going forward for at least the next 24 months.
So looking to 2019, would you consider other geographic markets, or would you remain focused on these core markets?
I think we're pretty committed to our core markets right now. You know, we've talked about if there was another marketplace that we would consider moving into, potentially it would be Vancouver. There makes some synergies for the tenant mix in that marketplace, and the operating expertise that we have in Seattle, we can run into that marketplace. There's no institutional REIT office owner currently today in Vancouver, so it would be a market that we're going to keep our eyes on. But for the most part, we've got a lot to handle in the Pacific Northwest in Seattle, here in the Bay Area, and in Los Angeles. So we're pretty excited about our markets.
Thank you so much, Victor.
It's a pleasure. Thanks so much.
And for more from REIT World 2018, be sure to visit REIT.com.